Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 23rd of September 2023 and we're publishing our gold and silver weekly update for the week ending the 22nd of September. Gold and silver was stronger this past week. Gold very marginally and silver a much more convincing effort. We'll take a look in a moment at the financial data that affected gold and silver prices. We'll also look at equities and how well they have performed and give our forecast at the end of this video as to where we see gold and silver prices heading this coming week. Without further ado, let's take a look. First, just a quick reminder, we've set up a second channel entitled Finances Do Matter with over 150 videos, and we cover a whole range of financial topics. So we've placed a link in the description box and comment section below for those who've not as yet joined the channel. Meanwhile, going back to what happened last week and what we expect to happen this coming week, gold rose just $1 last week, rising from $1,924 to $1,925, having hit a high of $1,947 and a low of 1914, a rise of just 0.01%. In sterling terms, it finished the week at £1,574, that's up £19, and in euros it was up €6 at 1,811 euros. Silver rose 52 cents, it did much better, rising from $23.04 to $23.56. Having hit a high of $24.12 and a low of $22.83, a rise of 2.25%. In sterling terms, it's up 65 pence at £19.29, and in euros it closed at 22.18 euros. That's up 0.54 euros, just over half a euro. The gold to silver ratio fell from 83.5 to 1 to 81.7 to 1. The difference between gold's high and low was $34, which seems to be par for the course at the moment, and the difference between silver's high and low was $1.29. Now this is what we said last week concerning our forecast. Gold we expect to trade between 1890 to 1960, which it did comfortably, and silver will oscillate between 22 and 24.50, which it also did comfortably. Now looking at other financials, Bitcoin is up just $56 on the week at $26,580, but it can change that within a moment's breath. Equities were broadly lower. Dow Jones down 655 points at 33,963. The S&P 500 down 130 points at 4,320. The Nasdaq closed at 13,211, and the FTSE was also down 28 points at 7,683. Oils, though, were marginally lower, but still held above that terrible $90 level, with Brent crude at $93.27, down 66 cents, and WTI crude at $90.03, down 74 cents on the week. The dollar index still holding up, and is in fact up 0.26 points at 105.58. Now looking at economic data announced last week, housing starts were lower for August by 0.17 million homes. Wednesday was the key day whereby the FOMC of the Fed skipped a rate hike for now, but doesn't rule out another increase this year. Powell and his colleagues made it crystal clear that, quote, we can expect higher rates for longer, and confirmed that the majority of officials expect one more quarter-point interest rate hike before the end of 2023. This means that the benchmark rate remains at 5.25 to 5.5%, and according to the Fed's dot plot forecast, 12 Fed officials penciled in this %, or 25 basis point rate hike this year, while 7 projected no more hikes. Flash PMIs were more or less as anticipated, and weekly jobless claims were 20,000 lower. Next week, we have nothing scheduled for Monday. We have consumer confidence for September on Tuesday, GDP revision for Q2 on Thursday, but another measure of inflation on Friday, the PCE and core PCE index. So all eyes will be on Friday to help give us an indication of how well inflation is being dealt with. If you recall, but not that long ago, we had the CPI figures. But we have to admit, whilst Friday will be important, they're not going to be determinable because there's such a long time before the next Fed rate decision. Looking at gold, we can see it was on an upward trajectory, though a small one, until the interest rate decision was announced, and more importantly, the Fed changed Powell's rather hawkish comments. Then gold prices fell back. New projections indicate that the Fed intends to keep its terminal rate above 5% throughout the entire calendar year of 2024, and that only 2 rate cuts may be possible next year, as opposed to the originally envisaged 4. So obviously this is going to have a slight dampening effect on precious metals. Now, without going into technical detail, the yield curve is also shouting the possibility of a recession and a bear market for stocks when comparing the 2-year versus the 10-year yield curve. With the Fed apparently intent on curbing inflation, then a short-term recession becomes likely. The prospect of another rate hike and an acceptance of rates remaining above 5% well into 2024 has also taken its toll on silver, slightly, even though it did rise towards the end of the week. Silver needs to stay above $23.50 before it can then test resistance at the rather important $24.50 level. We can foresee silver trading in the next couple of months more or less somewhere between $22 and $25.50. Not particularly exciting, but also not devastating. So this coming week, we're anticipating and forecasting gold to trade between $1,890 and $1,960, with $1,875 to $1,980 as outliers. The mood will be determined to some extent by the PCE index announcement on Friday. Silver may be a little more volatile, and we expect to see it trade between $22.50 and $24.75, with 22 and up to 25 as outliers. But inflation really does have to come down to see that figure. What do you think? Please share your thoughts. Meanwhile, we'd appreciate it if you give us a thumbs up, subscribe, press the bell sign, click on our link to Finances Do Matter, and as always, have a safe, enjoyable weekend and a prosperous week ahead.